Warren Buffett is well known for turning small amounts of money into ridiculously large ones. He bought a stock called Berkshire Hathaway in 1965, and through the power of investing, it grew into one of the biggest stocks in the world. In this video, I want to show you a clip of Warren Buffett explaining how you, a regular person, could have turned $114 into $400,000 through the power of smart investing.
So I want to ask a little bit about some of the new investing things going on in the markets. And Greg Wondra from Bakersfield wonders about target date funds. And I wanted to also ask about all the new index funds with a brain. Are those things really adding value?
No, probably not. The S&P 500 index fund is the one to use. That's the one I used in that bet I made for 10 years. It's the one I've told the trustee for my wife to put 90% of the funds I leave her into. The S&P 500 is, I don't know whether it's 80% of the market value of everything you can buy in this country, and it's over. I think it's over 20 trillion. And you're buying America. And let me give you a figure that'll blow your mind. I think I bought my first stock when I was 11 years old. It was the first quarter of 1942, shortly after Pearl Harbor. I spent $114.75. Three shares, $114.75. If I put that 114 into the S&P 500 at that time and reinvested the dividends, think of a figure as to what it would be worth today.
Oh man!
Well, it's
okay.
I just want your audience to think for a second.
Okay.
The answer is about $400,000. So if I, as a little kid, had taken that $114 I'd saved on shoveling snow or whatever I'd done, $400,000 today, one person's lifetime. That's America. I mean, that isn't me. It is the huge tailwind the American economy gives to any equity investor. Now, the market's gone down many times during that time. People have panicked during that time. Headlines have been terrible. It looked like we were losing the war when we first bought it. But America is a powerful economic machine that since 1776 has worked, and it's going to keep working. Now, you don't want to buy to hold for a year. You don't want to buy with the idea that you could sell it in 2 years or 3 years, necessarily make money. You could lose money that way. But if you buy it for 10, 20, just keep buying the S&P 500 index and forget about all the other nonsense that's being sold to you, because I'll guarantee you one thing about the stuff being sold to you: it will carry bigger fees than what I'm talking about.
Yes.
Yeah.
And there's no reason to think that we don't know if it's 400,000, but that same sort of process or returns won't happen starting right now.
The S&P 500 companies have earned well over 10% on equity, often 15% annually for years and years and years and years. They've done it with Democratic administrations, with Republican administrations. Now, you get money compounding at that kind of rate underlying your investment, and you get a diversified group of that. I mean, you're going to do well.
And that's the great thing about investing. Anyone can do it. You don't have to be an economic genius to do so. As long as you follow simple strategies and invest in the right places, as Buffett outlines, there's a lot of money to be made. I'll let Warren Buffett explain things in a bit more detail.
Thank you. I'm a physician from St. Louis, and I want to thank you and everyone here, because I'm one of these doctors that really doesn't know anything about money or finance. The money comes in, but I don't know what to do with it. I'm not able to really evaluate the financial strength of a company, but I can evaluate the ethical strength of the company, and that's why I feel real comfortable, I think most of us here, having our savings in Berkshire Hathaway. And Thank you. This question has probably been asked in different ways already, but several years ago, a fellow I know who had been manager of Magellan Fund warned that we were going to have a terrible decade or so in the stock market because of all the things people have brought up so far, the increasing interest rates and runaway spending and decreasing dollar, and stagflation may be right around the corner, Social Security problems, and even what Charlie Munger referred to is that most of our best and brightest graduates, I find, are going into money management rather than, they're not becoming doctors or molecular biologists or PhDs in chemical engineering. And so in view of the fact that a year or two ago, there was still an ebullience of emotion about the stock market going up and making everyone rich just by having their money in the stock market, it seems like that ebullience has dropped, and I'm hearing in anticipation of a bear market. And you wrote, I think several years ago, that it's hard to make money in a bull market, and the real opportunities come in a bear market. So I'm wondering if you would give us a clue as to what your strategies are going to be if it's really true that the market gets dismal over the next few years.
Well, if the market gets cheaper, we will have many more opportunities to do intelligent things with money. Now, whether we'll blow on the money in the meantime or something is another question. But you know, we are going to be buying things, one thing or another, operating businesses, stocks, high yield bonds, whatever. We're going to be buying things for as long as I live. Just like I'm going to be buying groceries.
Longer than that, Warren.
Yeah. Well, yeah. Charlie's just waiting to take over after I. And I'm going to be buying groceries the rest of my life. Now, would I rather have grocery prices go up or down if I'm going to be buying groceries tomorrow and next week and next month and next year? And the answer is obviously, if I'm a net buyer, I will do better if prices are lower. We're not good at forecasting markets. I mean, knew that we were getting enormous bargains in the mid 70s. We knew that the market went crazy to some extent in the late 90s, but we don't have much, we don't spend any time, Charlie and I spend no time thinking or talking about what the stock market is going to do, because we don't know. We do know sometimes that we're getting very good value for our money when we buy some stocks or some bonds, as it may be. But we are not operating on the basis of any kind of macro forecasts about stocks. And there's always a list of reasons. You gave a few. There's always a list of reasons why the country will have problems tomorrow, but there's always a list of opportunities which don't get mentioned quite as often. So we don't sit down and make a list of the bad things that are happening in the economy and the good things that are happening, and therefore expecting the stock market. It might not. It doesn't behave that way, even if you could correctly forecast some of the bad things or good things. Overall, I'm an enormous bull on the country. I mean, over time, this is the most remarkable success story in the history of the world, if you think about it. I mean, in 1790, we had less than 4 million people in this country. There were 290 million people in China. There were 100 million people in Europe. And they all had the same intellect we had. They were in the same general climate. They had lots of natural resources. And 215 years later, those 3.9 million people, I think, actually, have 39 million people, I think, actually, have 30% or so of the world's GDP. So it does not make sense to bet against America. That doesn't mean all our policies are smart or anything, but I do not get pessimistic on the country. I worry about the big worry is what can be done by either terrorists or governments that have access to nuclear, chemical, or biological weapons. But in terms of the basic economics of the country, your children are going to live better than you live, and your grandchildren are going to live better than your children live.
So the first thing that Buffett addresses is everyone's issues that they have with the market. Remember, this interview was conducted in 2005, and people were worried because a bear market might come and interest rates were different. Buffett says if you want to be a good investor, you actually need to embrace bear markets, because bear markets essentially mean stocks have gotten cheaper, and that's when you want to buy. It's the same with a car. If a car was half price, people would be all over it. But when it comes to the stock market, they behave in the opposite way, the wrong way. So that's one thing you need to always remember if you want to compound money and grow it into large amounts. Keep investing even in a bear market. Then the question becomes, where should we invest? And I think Warren Buffett was pretty clear in his views here. America has made millions and millions of people rich. In 1790, it had 3.9 million people, and just over 200 years later, it was producing 30% of the world's entire GDP. America is powerful. America is the money capital of the world. You know, as Buffett said, if you invested $114 into America in 1942 through the S&P 500, today it will be worth over $400,000. It's the same with the future. If you want to turn small amounts of money into large amounts, invest in America over the long term. That's what Buffett thinks anyway.